702.
You're listening to the best of The Money Show.
The Money Show.
Welcome to the best bits of The Money Show. You're listening to a digest of some of the most interesting and thoughtful and sometimes just the most important comments from the week that was. If you'd like to hear more, please go to your podcast app and search for The Money Show. I'd like to suggest as well, there might well be someone in your network, in your circle, in your family or community who you think might benefit or have a particular interest in any of the conversations that we have. Please do feel free to pass it on to them. To start, some of the news stories that we thought were important from this week. South Africa's new inflation target now. The inflation target lowered from 3 to 6% to just 3%. There is a 1 percentage point band of tolerance in either direction. It's the first adjustment to our inflation target in 25 years. You have to go all the way back to the year 2000 to when we started inflation targeting to actually see a change on this scale. In the US, the President, Donald Trump, ending the longest US government shutdown in their history, finally signing a funding bill passed by both chambers of commerce, and new numbers from Stats SA showing that our unemployment rate actually eased. We created 248,000 new jobs in the third quarter of this year. Tonight, we bring you a mixture of stories from the world of money from the week that has been. This week on How I Make My Money, we spoke to Dr. Reza Mia, an accomplished aesthetic doctor, a key opinion leader, someone who's been in aesthetic medicine, has an interest in aeronautics as well, and he told us how he had ended up in trying to make people simply look and feel better.
It's very different to plastic surgery. So plastic surgery, plastic and reconstructive surgery is more things you have to go into theater for. What we do is anything that you can do outside of a theater, things that you can do with injectables, surface treatments, machines, these types of things.
And the market for that has really changed. I mean, I was thinking sort of 30 years ago, I mean, if you had said Botox, if you had said this, if you had said that, people would have gone, people do what? Now it's kind of everybody does it. I mean, not me, but everybody else does it.
I remember when it was mainly women, 90%, whereas now it's about 60% women. And I remember when it was a very hush-hush. Nobody wanted to talk about what they were doing. It was always a secret. And obviously we respect that still. But because of social media, I do think everybody is now open to sharing what they're doing. They like to talk about what they've done. And they like to compare themselves to other people and what they're doing. And it becomes quite an exciting thing to share with other people.
It's kind of almost a team thing in a way. Let's all go together.
That does happen. We do have people coming in together, and I think it's nice, whether it's family or friends. You know, we always respect the boundaries of the medical fraternity and make sure that we stick to all our rules. So it's not the likes of a champagne toxin party, but people can come together and they can have fun doing it.
The other thing that's obviously changed, and this is something that's been happening for a long time, but I would say also in the last 30 years, is that people are living longer, but they're also being a lot more productive at later ages. So, I mean, you have people who are doing, I don't know, long cycle races into their 50s and 60s. That did not happen 40 years ago. It certainly wasn't very common. And so when people are being a CEO at 60, they want to look good.
People are living longer, they are productive for longer, and I like to look at things. I'm sure everybody's seen the posts of, you know, the Golden Girls and saying, oh, these people were the same age as Jennifer Lopez is now, and look at the difference. And I think that's actually a good sign of evolution in our society where people are looking after themselves better. And, you know, medical technology is improving in a way that we can look after ourselves better, but also it leaves us space for things like now regenerative medicine, where we can use things like platelets and stem cells and actually make people legitimately younger, not just looking younger.
Do you think it means that people are living longer as a result of those interventions? I mean, some of this is really cutting edge.
I think it's a mixture of a few things, but mainly it's people are finally listening when doctors say, go to gym, don't eat shit. I mean, that's the biggest change, and that makes the biggest change in our longevity and how long we live.
Sorry about that, but he's a doctor. He can say it. Reza, okay, let's just go back a little bit. You were obviously at school, I think a little bit after me, and then you went to medical school. And from everything that I've ever seen or heard about you, I think you're one of those people, and tell me if I get this right, that it was always going to be medical school for you, wasn't it?
No.
Oh, really?
I didn't know what to do when I was a kid. I thought I should become a pilot, which I'm doing right now. I'm on 52 hours, and eventually I got there. But also because of Pegasus, I'd like to fly that myself. And, at the end of school, I thought, I don't know what to do. Let me just register for a few things. I chose medicine, law, and actuarial science. And I said, whichever one I get in for is what I'll do. And, the humor of the universe, I got accepted for all. And so I didn't know what to do. And I thought, let me do a year of medicine. If I like it, I'll stay. If not, I'll try something else. And I did, and I actually did like it. And I enjoyed the process of learning. And, it was hard at first, but over time, I became almost addicted to the feeling of learning and progressing.
Your marks must have been quite something for you to get accepted at all three.
I think they were okay, but there was something called a biographical questionnaire, and they looked for well-roundedness. And, I was honest about it. I put down everything I've done, and I've always had a little bit of, wide interests. We went to DJ school at some point, and all of these little side activities actually came together quite nicely for the people deciding, whether to admit you or not.
No, I suppose that makes sense. Whenever I've spoken to doctors, the one thing they'll agree on is the studying is tough, but also then the first year or two being a junior doctor, actually going to a hospital and treating people, the hours, all of that. It must have been like that for you too?
Internship in community service. I did it at Baragwanath and then Joburg Jain. And it was exactly like people say, probably much worse, understaffed, hours were long. But, it was good experience. And everything you learn there comes back and helps you in many ways. I'll often say to my staff here today, when they feel like they've had a hard day, I say, it still feels to me like I've died and gone to heaven and retired from working in the government hospitals. And no matter how hard the day gets, it feels fine because we've become almost acclimatized to that difficult time. And I think it's a good training ground for the doctors.
The move into aesthetics, how did that happen? I mean, what attracted you to that?
I feel like I was just guided here very organically, almost like I had nothing to do with it. So I was importing a product from a doctor. I don't know if anyone remembers Dr. Robert Ray from Dr. 90210.
Yes, I do remember that. Yeah, long time ago now.
Long time ago. We were bringing in his products, his skincare line, which is called Sensual Solutions. And one of the products was called Inhibitox. And they said it was a toxin-like cream. And so it actually had a difference. And now that I know enough about toxins and how they work, I'm not sure how that cream worked, but it obviously didn't work with the skin or sticker. And so people kept saying to me, well, you're a doctor, why don't you just do the course and do the injections, do the fillers? And I thought, 10 people have asked me now, someone's trying to tell me something. I went and did the courses and started doing those patients very part-time, but they kept coming back and bringing people with, and their mothers and their sisters and their brothers. And I thought, well, let's see where this goes. And eventually it became the full-time job. I guess I enjoyed the process. Our motto of art meets science is very well placed in this profession. You need to have both sides of that brain active. You need to be in art. You need to respect the science and use it. And bringing them together gives you very good results most of the time.
A lot of what you do, I presume, is about working with skin. And I'm interested in what you've sort of learnt about skin, as, my children will tell you, your biggest organ, your heaviest organ is skin. And how the skin sort of works, because I've noticed as I get older, my skin changes. I, for various reasons, will be prone to sunspots and things. And yet I also know that, what we can do to look after our skin has changed dramatically. And we actually can do a lot more for our skin than we could 40 years ago.
There's things that we can do preventatively, things that you can do at home, things that we do here. And also, I guess, the protection. We know now that you should wear a sun hat and put some sunblock on when you're going into the sun. We also know that you do need a little bit of sun. You just, don't need it on your face. And it is important for us to just look after ourselves holistically and to understand that each patient is unique and has a unique formula to look after them. So it doesn't help to kind of follow a certain route of we always do step 1, 2, 3. It's about looking at the patient, understanding what they want to have treated, combining that with what we see, making sure that it's always reasonable, always beautiful. They need to walk out looking good, well, after the settling. But our goal is for everybody to walk around feeling and looking their best without anyone noticing that they've had work done. It shouldn't be visible as, hyperinflated lips and cheeks, and that for us is a fail. What people should say is, wow, you look good, or they should just be nicer to you. And, the psychology of aesthetics is where it becomes interesting. And I'll give you some interesting facts if you'd like to hear some.
Yeah, go on.
Okay, good. So, there's a value. If you could say an attractive person would earn more money than an unattractive person, what would you think that would be?
Yeah, no, well, there is a value, yeah.
Well, the value is the equivalent of an additional master's degree. And this is what the studies show. And so it's not hypothetical. It's a legitimate, real difference. And sometimes people say, well, that's not fair. But if you look at it, you take a step back, we actually now live in the most fair time in the history of human beings, because now there's something we can do about it. And, somebody who is able to get more attention from clients and customers, who's able to sell more because people are more receptive to hearing what they're saying, would naturally actually earn more money. And so sometimes the studies seem a little bit contentious, but when you look at it, it actually is very realistic.
There is also something about being healthy, and that is really about exercise and not eating that stuff that you told us not to eat earlier.
Very much, looking good, feeling good, being healthy, it is holistic. Most of the time, for example, we have patients who come in and say, I'd like these injections to burn the fat off my tummy. And, as long as they understand that this is not a weight loss tool, it's something we use to sculpt, and the responsibility is on each and every one of our shoulders to make sure that we are going to gym, looking after ourselves, sleeping, having the right mental attitude, because we can do as much injectables as you'd like. If you don't look after the basics and the foundations and you're not healthy, you don't get the right effect and you don't look great.
Do you think your business is going to be affected or is being affected by the sort of new weight loss medications? Some of them are going off patent this year, next year in particular. Some of them are going from injections into pills. I mean, they're going mainstream in a big way. And if there's one thing that many humans want, it's to look good while still being able to eat nonsense.
Well, I think what people are starting to realize is that there is no easy fix. If you had to look at what it does to you, it causes you to lose weight. And the problem is that you don't lose just fat. You lose muscle, bone, fat. Your face becomes saggy because you lose the weight very rapidly. And so we've been treating a lot of that side effect, and we've been getting people back into shape. Now, the long-term effect of losing muscle is that your metabolism drops. And so when you stop the product, if you go back to eating the way you were before, you actually gain a lot more weight because you have less muscle to burn your energy. The best way that somebody can lose long-term weight is to build as much muscle as possible and to allow that active tissue to increase your metabolism and to use your energy stores. And that's kind of the nice, natural, healthy way to do it.
We're speaking to Dr. Reza Mia on My Money tonight on The Money Show. The aesthetic doctor, fascinating story, learning quite a lot about the business as well. 9 minutes to 8.
The Money Show, how I make my money.
7 minutes to 8 the time. Dr. Reza Mia is the aesthetic doctor. You'll have heard of him many, many times. Reza, I think I sort of have a sense that many of the people who come to you will be people in the public eye, very successful people, rich people. Is it like that? Or actually, are you finding quite a lot of ordinary people sort of come? I realize in our country, I mean, you can't really say ordinary people because it's such a diverse country, but do you find that there's quite a large different groups of people coming to you?
We have a nice mix of people that come to see us. We've always tried to step back and look at the demographics, see who's coming, where are we meant to be advertising, that type of thing. And we've always found that we had a nice mix of age, basically religion, race. It's kind of like the United Nations. I really like that. But of course, different people come in with different problems. Younger people would come in looking for things like a little lip or to deal with acne. And people who are older, they need to have more injectables like the toxins, the fillers, the skin conditioning. And they do tend to have more money because they've been working for longer. So it kind of tends to balance out, and people do come for what they need.
I'm interested that there's such that there's such an age spread. I mean, clearly your services appeal to people of all ages.
I would say teenagers starting at about 14, 15, and our oldest patients are in their 90s.
Wow, sure. You've also been involved in aviation. You did a dissertation in aerospace analysis. I mean, most of us can be interested in planes, Reza, but to actually do a dissertation in it, that's quite something.
So that was actually part of a master's in finance that I did. And I thought, you know what, I need to do a dissertation, and I do need to do some market research and a business plan and modeling for the company that I started called Pegasus Universal Aerospace. And so I combined it in one, and then had the university obviously giving me guidance and that type of thing. And it was kind of a win-win. So I was very happy about that. And it led us to start the development and continue the development of the vertical business jet that we're creating, which is a plane that takes off and lands like a helicopter, but flies like a plane. And, you know, there have been a few eVTOLs in the world, electrical vertical takeoff and landing air taxis. So that's not the same thing. Those are small ones to jump from here to Sandton, for example. What we're looking at is a full business jet that can fly for 6.5 hours at almost 800 kilometers an hour. But I'm not sure. Have you seen the movie The Lost City? The one with Sandra Bullock, Channing Tatum?
Yes, I have. Yes.
So they contacted us and they said, oh, we like your plane. Can we put it in our movie? And we said, this sounds like a scam.
You said, no, Brad, you can't. No,
I was
Sandra.
like, this sounds like a scam. And I said, how much money do you want? They said, no, we don't want money. We just want to use your model. Can we build a set? And, you know, they built an interior cabin and did all the scenes where they kidnapped Sandra Bullock, you know, where she falls over and that type of thing. You'll see if you go back now and watch the Pegasus on the headrest. And they said, you don't have to pay us anything. Just let us use your plane. And I thought, well, sure, this is a good opportunity. And obviously the CGI, the external flying scenes were CGI. But that exact plane that they used to pick her up and, you know, blows the sushi away and fly her to the island, land on the beach, that is our the VBJ, the Vertical Business Jet, and we've been developing it since 2012. Obviously, just as funding here was available, or we've been able to earn it through our injections. I'd like to say it's the first plane powered by fillers, but we also, in the meanwhile, then realizing that, you know, time is running out. Someone else will do a better plane if we don't hurry. We need more money. And it's interesting, you can't really get money from people, really big money, if you haven't done it before. And so we thought, let's build something smaller. Let's build an eVTOL that can take two people, that somebody who's, you know, in the market for multiple sports cars would rather buy something more exciting. And so we started this 2-seat version, which we are actually building right now. And that should be ready sort of early next year, that people can already start buying. And that we'll use to fund our project going forward for the bigger plane, the Vertical Business Jet.
Dr. Reza Mia there, the aesthetic doctor, and reflecting on his journey in aesthetic medicine, his vision for growing the business while also staying ahead of skincare and anti-aging trends.
702.
You are listening to The Money Show's Best Bits.
Our business book review, Dion Chang, the CEO and co-founder of Flux Trends, he spoke about his book. It's fascinating. It's called A Pawfect Life. It's a guide into modern pet parents. It's a guide, really, into the pet economy and how it's exploded. People who book seats on aeroplanes for their animals, what people feed them, all sorts of things. Dion Chang had a lot to say.
It has been extraordinary. I think last time I spoke, I mentioned a stat that really was the genesis of the book, that we've been tracking aging populations, declining birth rates around the world, so just changing demographics. And in South Korea, where there's a real problem about birth rates, in 2023, the largest e-commerce retailer in South Korea released their results, and they discovered that they had sold more pet strollers than baby human strollers.
Oh, my
and
word.
That got me thinking that something was up. And then when I started digging around, it's happening all over the world. So on both sides of the planet, in America and in China and Japan, there are more households with pets than households with children under the age of 15. So there's a huge shift happening.
And are most of these pets dogs? I mean, that's sort of the original pet. I mean, cats don't call themselves pets, but obviously they are too.
You're talking to a very dedicated cat butler. So yes, both dogs and cats. Some people extend that to their feathered friends and everything, but I've focused predominantly on cats and dogs.
I mean, the economy around this must be worth a fortune, from pet food to strollers to doggy treats. I mean, doggy ice cream is on sale near where I live. Constant fight with my children because no. But then also on transporting animals as well.
Yes, so you're getting. I went down multiple rabbit holes to look at the services that of extreme pet pampering. So I think normal pet parents would either go with their pets or if you're going long distance in cargo. But there are now services. There's airlines called Bark Air or VistaJet. They transport solely. And it's the other way around. They say one pet and a human. So it's not a human and their pet, but one pet plus a human. But it goes on. So there's a new category which I also discovered called barkitecture. So architecture.
Don't. No, I don't know. A kennel is a kennel.
No. So barkitecture is when you kind of redesign your home around your pet. So, for example, in very northern hemispheres where it's cold and it's very muddy and rain, you've got a sort of a shower station in your mud room, which is like a laundry room. But other people have done little alcoves. If you've got a staircase and under the stairs, where Harry Potter would have stayed, that becomes a luxury dog kennel or a dog house for them. So, and cats also have their own category because people are creating now catios, so patios for cats, and they're sort of enclosed for safety and all of that kind of stuff.
I've come across people younger than I, and I'd like to stress that part, younger than I, holding parties, birthday parties for their animals, and I'm like, but their animals don't know. Firstly, dog years are 7 times human years anyway, and secondly, really? I mean, all the dog wants is something to eat, really.
Well, not the pet parent. The pet parent. So there's an entire chapter devoted to that, and they're called Bark Days. And there are companies, even in South Africa. But I put the gold standard at the London Dog Party Planning Agency, and they plan these massive events for your pets and for a parallel event for the parents, because it's actually just an excuse for the pet parents to get around and then have a drink. But everything. I mean, you mentioned ice cream for dogs. I have a subtitle there called "Should We Serve Drinks?" And there is now beer for dogs, which is non-alcoholic, I must stress, and non-carbonated. But it is kind of spiraling out into this almost insane and absurd level of pet pampering, although I think most pet parents would secretly say that if they had the means, they would do the same.
Is it all about where you started, Dion, the kind of lack of children? There's a void. I mean, it's treating an animal like a human. In a way, I don't know if people quite have the same strength of feeling for an animal as they do for a human member of their family. And I can absolutely understand it. Who hasn't, when you've had a bad day, come home, the dog's been happy to see you when no one else is? It can really matter. It can make a difference to almost anyone, actually. It's not very wise or very healthy in some ways, though, is it?
Well, actually, this might surprise you, because I went into the science of fur babies or fur kids, of why we have such a deep attraction. And two things really, really stood out. So the first thing is, if you lock eyes with your spouse, your children, your closest friends, your family, you get a hit of oxytocin. So you get a chemical rush that just hits into your brain, and then it gives you these wonderful feelings. And researchers found out that if you lock eyes with your cat or your dog, you have the exact same chemical reaction inside your brain. So it ignites this chemical reaction and a rush of oxytocin. And then for people who have kids as well, or little toddlers, as well as maybe a young dog or something like that, the facial features of an animal, round eyes, round fluffy face, all of those kind of things. But if you look at the cognitive ability of your pets, they have the same cognitive ability of a 2 or 3-year-old toddler, and they behave like that. So they run around the house with their toys, all of those kind of things. So it also kickstarts a very mammalian care system, and you want to nurture and protect this. So subconsciously, it's an animal, but with the oxytocin and with the sort of this toddler syndrome, you really, really want to nurture and take care of this fur child.
That's interesting, because when I look in my dog's eyes, I can't believe I'm saying that, I can understand the care. When I look in particularly my male cat's eyes, all I can see is, if I were bigger and I was a tiger, I would eat you. And I mean, he sleeps on my bed, but that's all I see.
Well, let's just say there's a very, very long interview I do in the book with an animal behaviorist. So what I wanted to do was look at the pet economy, the kind of the services, and that includes my new trajectory of saying goodbye to pets, which is not known in this country, but that hasn't stopped me. A pet doula to help with pet bereavement, because the grief is the same. It's a very, very, people get knocked with what they call disenfranchised grief, because people say, well, just get over it and get another one. But it's a very long and a relationship you have there. But I wanted to speak to a behavioralist, and that she kind of recalibrates all the things in the book. And you probably won't like this, but she said, if you want the perfect dog, get a cat.
I will be sure to say that when I get home. Dion Chang, great to talk to you. Thank you. Really enjoyed that. The CEO and co-founder of Flux Trends. The book is called A Pawfect Life. Yes, Pawfect. A Pawfect Life by Dion Chang.
702.
The best of the Money Show from this week.
Your consumer ninja, Wendy Knowler, this week, talking about a hidden risk you might have overlooked when you pay your car insurance premiums every month. And you might think that you're perfectly covered, but instead find that actually, even if something were to happen, you have no chance of getting any money out. Knowler looking at common insights that can invalidate your cover, such as listing yourself as the main driver while your child is the main driver, or listing them as the main driver while you're the driver, or missing updates from insurers about new tracking device requirements. That's a common one, particularly for some of the high-risk vehicles like VW Polos and Toyotas in Gauteng or KwaZulu-Natal.
Yes, and I want to talk about them because I hear about them in many cases when, people have been making this grudge purchase of their insurance premium every month, thinking, well, at least I'm covered if the bad thing happens, and then they make a claim and they discover, no claim. So the most common one is your teenaged son, daughter, or 20-something is actually the regular driver of the car, not you, as you told your insurer. So that's a definite rejection of claim. You live in Gauteng or KZN, you drive a car statistically at high risk of being stolen or hijacked, VW Polos and most Toyotas, among others. So you didn't need a tracking device at all when you took out the premium, or you only needed a basic one. Now your insurer has responded to the increased risk and required you either to get one or to get a better one. They sent you the email, you missed them or didn't digest them properly. You missed the email saying you've lost your cover on theft and hijacking. And when the bad thing happens, there's no claim. That is a very common one at the moment. I really want to speak about it a lot. Or, as in today's case study, unbeknown to you, your premiums weren't debited and you had no idea of this, and you didn't know that your cover had lapsed. As a result, you make the claim and it's sorry for you.
So what happened in this case?
Okay, so Margaret of Cape Town, she switched to Naked on the advice of a family member to cover a second car that she'd bought for the use of her daughter. The daughter was out of the country last year, and and the husband started using it on and off because it was small and nippy. Then came what she calls a series of unfortunate events. She lost her credit card after a run, so she cancelled it, but she didn't think to update her payment details on the Naked app. Everything's run through the app on Naked. So she says in other cases, companies contacted me about non-payment and I was able to rectify, but she says she didn't hear from Naked. And then the bad thing happened.
And what happened? I mean, this is the kind of thing you only discover the bad news after the bad news.
Exactly. So a taxi driver rammed into the back of her husband on an off-ramp, the infamous hospital bend in Cape Town. Margaret went onto the app to lodge a claim, didn't get far. She couldn't really get into the app properly, so she called the insurer, and that's how she discovered that her insurance had been cancelled in March due to incorrect bank card details. Yeah.
And then she hadn't actually been formally told of this.
Yeah, so this was her main point. She said, I get that I didn't pay, the payment lapse, but she said, I didn't have any idea that this had happened. She said, they told me that they sent emails and they can actually prove sending the emails, but they didn't show up in my inbox, she says. I asked them why they didn't call, and they said, no, we do everything via the app. So... yeah.
Yeah, I mean, look, apps are great, but it's so easy to miss something. And sometimes you're never going to go and check. Why would you? You don't see a reason.
No.
And then there's also, it's not like it sings and dances, and there's so many other things that sing and dance on your phone, you just don't look.
Well, apparently she was told that her app had been muted, so no singing or dancing or anything else. And that's why she didn't get the notifications. She said, I was also unaware that emails from Naked dried up last year. But Margaret was blissfully unaware of anything being amiss, she said. I understand, as she said, I don't have a leg to stand on, but I'm not aware of any communication, and I just want people to be made aware that if the app is muted for any reason, all communication from Naked will be effectively stopped.
But they also, I am sure, I've never used them and I've never been on their app, but I wouldn't be surprised if they make it all singing or dancing so you get tired of it. What did Naked say?
So it was quite a curious one, Stephen. I asked if it was possible for somebody to mute their app by mistake, because, as I say, Margaret had no idea she'd done it, and whether there was some fix of some kind called for. Responding, Naked co-founder Ernest North said the regulations, policyholder protection rules, require insurers to give policyholders a month's notice of any changes and give them at least 15 days grace after this lapsed payment of any cancellation, right? But he said we go further than that, does Naked. We send an email every month when the client's premium is collected. We give them 30 days grace after non-payment, during which time we send them 5 emails to warn them of non-payment and imminent cancellation. On the app, there's a notification of non-payment that pops up, and if the person has enabled push notifications on their cell phones, they'll get one saying, please, warning, we haven't got your premium, make a plan. But of course you've got to, as he says, you've got to actually open the app to see this, and the push notifications won't happen if you disable them on your phone. But he says, and this is the curious part, he says emails are separate from app functionality. So even if there was a problem with the app, she should have got the emails. The client can stop certain emails, but they can't stop emails that say, hey, watch out, we haven't got your money, your policy's going to lapse. So it's a bit of a mystery as to what happened there, because they can prove they sent her emails. She didn't get them. She was told it's because your app was muted, but apparently that wasn't the case. Bottom line, though, is I think be proactive now, especially going into peak season. More cars than ever are going to be on the roads, and you really don't want to find out by accident, excuse the pun, that you actually don't have any cover. So, yeah, or you have cover, but you've done something that's going to invalidate it and you have no hope of a successful claim.
Do you have general advice here? Especially going to the December period. Do you need to look through the fine print again?
Yeah, I think other than making that call, because here's the thing. In cases such as insurers removing theft and hijacking cover, saying from your Toyota Fortuner because you didn't put the right tracker in, they'll just send an email. I asked them, why don't you make a call? It's important. Let the person know that you don't have cover. No, the policyholder protection rules don't require us to do that. So they're going to send you the email. And if you miss it or you think it's spam or whatever, else you're in trouble. So I would say they're not going to call you. You phone your insurer, find out everything's in place, find out that the regular driver is the correct one, update your address, that's the other one, your home address if you haven't done it. Ask, are my premiums up to date? And so you have the confidence that, yes, you're paying this premium, it's a grudge purchase, but actually it's going to save you if you have to claim.
Wendy Knowler, your consumer ninja, as always, read the small print is what she's going to tell you. And just check. Wendy, thank you very much indeed.
The best of the Money Show
on 702.
702.
Investment School this week, we spoke to Vincent Anthonyrajah, the CEO of Differential Capital, and Hlelo Giyose, the Chief Investment Officer at First Avenue Investment, unpacking how our insurers generate profits and whether they provide a compelling investment opportunity.
Well, the insurance sector is a captive of South African savings, long-term savings, rather than short-term consumer savings. So the banks do short-term consumer savings, whereas insurance companies do long-term savings. Now, what does long-term savings mean? It means, for the most part, your life, and it also means so your life policy, funeral policy, but also a property casualty, which is your car, your home, built property, commercial buildings, fixed property, farms, and so on. Any country that is asset rich, meaning that has a formalized sector of ownership of assets and can lend against those, requires insurance against them or for them, right? If you go to a bank and you borrow money to buy a car, to buy a house, the bank will likely also insist that you insure that car for as long as you haven't paid off the debt yet, right? So it turns out the two go together. Hence, in the past, life insurance companies used to be partners or have part shareholding with banks. So I think it's ABSA used to be with Standard Bank, used to be with Sanlam, NetBank with Old Mutual. It was just capturing the same value chain of the same rand. Now, these are two different businesses, so it doesn't really make sense that they're together, but you can imagine that one leads, in some respects, one leads to the other. Today, you can still look at someone like ABSA, but even Standard Bank, all the banks, in fact, have insurance businesses inside of them for that very purpose.
Okay, so Vincent, I mean, there are obviously things that you get from this, and you can then need to start looking at where the profits in the insurance industry come from.
Yeah, and I think when you look at the insurers today, they're actually quite varied compared to the banks, which are maybe a bit more similar to each other. So on the one hand,
would you dare say that to Discovery Bank?
Yeah, they're so different. But if we look at the insurers, and let's start with Discovery, probably almost a third of its profits actually come from medical aid administration, which makes it a bit different to the others. So already there's a component of its profits that come from a different source that's not that capital intensive, that's high return on equity, and then on the other side, you have, let's call it, insurance groups that are more short-term insurance focused, non-life. Some of them are really awesome businesses like Outsurance, as an example, which only make profits from really largely retail selling to insurance cover, household and car to people like me and you. And then on the other side, you've got the more traditional, the bigger insurers like your Sanlams, Old Mutuals, Momentums, that make a big part of their profits from life insurance or mortality risk, as well as savings. So because they are savings pots for a large amount of the population, they make asset management profits. Basically taking fees off the savings that they collect on behalf of others. And then there's a unique aspect of insurance in that almost every insurer has what they call a float or shareholders' funds. And that's invested in the market, and they also earn interest on that. That's roughly where that makes up most of the profits of insurers.
Hlelo, so there are different ways that money comes into the insurance industry, right? So there's underwriting, there's premiums, obviously there's investment income. some must be more important than others,
Yeah.
and particularly at different times.
You are, as an insurance company, you are in the business of underwriting risk. It's one of your great core capabilities, your core competencies. You have no shot at float, for instance, or any other knock-on business if you can't underwrite risk really well. So therein lies a rub. The different techniques of underwriting risk. For the most part, most insurance companies have had a similar group-based, and I'm going to explain what group-based means, group-based method of underwriting risk. And then here comes Discovery saying, actually, we're going to underwrite risk on an individual basis. And we're going to put each person through a particular test. And we're going to call that test vitality. And you're going to work out, and we're going to put thematics or telematics in your car, We're going to do things that individualize you so that we don't lump you up as 28-year-old male, black, urban, and then we charge you the same amount. We're going to charge you differently according to how you individually behave, how fast you drive, where you go to, so on and so forth. And that's part of underwriting risk, right? And the one way of thinking about it is that you get a universe of customers, right? And the trick is, how do you throw out, may I use a really bad phrase, how do you throw out the bad apples?
Yeah.
So you use negative selection, in that case. You start doing things that, say, Discovery is doing, and if someone keeps getting tripped up by some of these tests, the premiums just go up. So you can imagine if you keep crushing your car, the premiums just keep going up. If you smoke and you do all sorts of things, your life policy just keeps going up. That's negative selection. And you get to a point where the premiums are so high, even you can't get insurance from anybody, or no one wants to underwrite you anymore.
Okay, so I mean, obviously there's a lot of money that comes in from there. Vincent, there must be times when the insurance industry has a rough time, and I can think of two recent examples. The one is the flooding in KZN. Yeah. And I think in some ways we're not actually done with that from an insurance perspective. Sure. And then the other is COVID. Yeah. I mean, if you looked at what happened with the life insurance industry, there were a lot of people, and of course Sastria, and I want to talk about Sastria in a moment for various reasons, had to be recapitalized.
Yeah. So fortunately with the life insurers during COVID, they increased their reserves because they did see elevated, death claims. But then what the actuaries do is they start, extrapolating and making assumptions. And so what happened is they then increased their reserves. In other words, they held back on a lot of the profits and started, reserving for more losses. And as a result, they declared very, very low and negative profitability. And they all went through, let's call it a really torrid patch. And not to mention, certainly elevated amounts of claims payments due to, higher, vastly higher than normal deaths. So that was a really rough time for the South African life insurers. And to make matters worse, I think I remember reading in Swiss Re, one of the global reinsurers, they actually said South Africa was one of the worst places that they'd seen in terms of baseline mortality changes during COVID. So so I think that was an incredibly tough time for the South African life insurers. But other than that, generally life insurance, it's hard to find, events where you have large scale amounts of deaths. It's usually one of the most stable forms of profit that you can get. I would say, let's call it in the 80s and even early 90s, there was the AIDS epidemic, and there was, but it's not, that's a gradual worsening in mortality, not huge shocks. And when mortality is gradually changing, you can price for it. It's these shocks that are difficult to cope with. And then if we look at, for example, the riots and those floods, those generally do hurt, the non-life insurers. But having said that, South African non-life insurers are really diverse in terms of the lines that they make business profits in. So it's not just car and household. You also have engineering, as Hlelo mentioned, a lot of other business lines that need to be covered. And you'll find that some of these actually, the profitability actually offset some of the losses that you get. But having said that period of the riots and now, the floods, those are going to have impacts on the profitability of the short-term insurers. Yeah.
Hlelo, we had the CEO of Sastria in Mpumitsikwe, I think, off the top of my head, about 2 or 3 weeks ago. And we were talking a little bit about politics, and I suddenly realized that this person had a more intricate knowledge of all of the sort of risks associated with South Africa due to politics than almost anyone I could think of.
Yeah.
And I thought that was really interesting.
Yeah.
And one of the things about insurance is you have to really know where the risk lies. So that is Sastria's risk because they're the only ones who insure for political risk. But there's the technology now of geocoding for flooding in KwaZulu-Natal, for example. Those are parts of the business that have to be run really well.
Not only that, you have to have satellite information to tell you where the fires might be this season, the droughts might be this season, natural catastrophes, as they call them. But I want to just say something. Perhaps we missed a little step here. That one has to be curious about why South Africa is so overinsured.
Yeah.
Right? Why is this a great business, actually?
Crime.
Right? No. It's lack of a social support system. In countries where you have a social support system, insurance is not that prevalent. But in South Africa, if you do not provide for yourself, when I say provide for yourself, life policy for yourself, and the greatest concern that people have is, when I pass on, who's going to look after my children? Now, you think about it, it's a little bit backwards because what you really need to worry about is your health. We're overinsured from a life policy standpoint. We're underinsured from a health policy standpoint, right? But health policy is way more expensive than life policy. Not only that, funeral policy. We are as a country, we have the highest funeral insurance policy in the world, right? Why is that so? Once again, we're self-providing, right? And we're self-providing at the most basic and survivalist level, right? If you could, you can take it up to security in your home. That's insurance, right? But the reason why we have such a high penetration of life insurance policy is exactly that, self-provision.
Sure. Such an interesting point. You're with Investment School on the Money Show tonight. Hlelo Giyose is the Chief Investment Officer and Principal at First Avenue Investment Management. Vincent Anthonyrajah is the CEO and co-founder at Differential Capital. We're looking at South African insurers and the investment case for them.
The Money Show.
Investment School.
9 minutes to 8. Investment School tonight. South African insurers. Are they worth investing in? Vincent Anthonyrajah is CEO, co-founder at Differential Capital. Hlelo Giyose, Chief Investment Officer at First Avenue Investment Management. Vincent, obviously different things happen in our economy. So, for example, the economy grows or doesn't. Inflation goes up and amazingly also comes down. We see interest rates going up and down as well. Do those affect the valuations of insurance companies? Do those have any impact on how much business they do, how much profit they make, and ultimately how much you should invest in them?
Sure. So what many investors like to look at is the insurer's own estimates of what their future profits are going to be. So that's called embedded value. There's other fancier terms now under this new IFRS rules, but the actuaries go out there and estimate what the future value of those profits are going to be. And when economic situations change, for example, when interest rates drop, you can find that the present value of those profits actually rise quite a lot, depending on the nature of the assets and liabilities. But yes, they are really, that value is quite sensitive to those assumptions. So let's call it the direct impact. There's a more indirect impact in terms of the behavior it has in terms of individuals. So we do find when short-term interest rates like prime rises a lot, there is an impact in certain types of policies where people stop buying them a lot. And that's, to Hlelo's earlier point, a big driver of people buying insurance is when they're buying a house or something like that. So it's that part of the economic cycle that causes people to buy less or more insurance. So you find that when interest rates are dropping and people are starting to buy more houses, you start, not only needing to buy to cover the loan, but also generally people start thinking about, more cover, and they have perhaps a little bit more disposable income. The interesting thing, though, is I found that when economic times are tough, certain policies are really sticky, because people find that they'll try and hang on as much as possible to that. Because when times are tough, and again, I said certain types of policies, especially these, life insurance, especially, let's call it the underwritten life insurance, where the person's thought really long and hard about taking the policy, and they're really aware of it. What you find is, even though times get really tough, those policies are quite sticky. Because think about it, when things get really tough on your personal financial circumstances, the one thing you don't want to do is, if anything happens to you, you get sick, or you die, then there's nothing for your family. So we find there's certain elements of robustness in the business model of a insurer.
Hlelo, so then the investment case. So I would presume then that, in a way, because of the way that they run, it's a fairly consistent business. You kind of know what you're going to get, at least. There's an element, to an extent, of predictability about it all?
There's an element of smoothness to it, right? But I have to tell you that the best part of life insurance, let's say life insurance for the most part, because it's probably the largest, most profitable pool in there, is that people shouldn't have it, actually, right? Rich people don't have life insurance policies. Rich people have credit insurance, so that when they die, the insurance company pays off the house or pays off whatever they may owe. They have key man insurance, so that when they die, the insurance company pays off their family, pays the company buys out the family's shareholding, and does what it does with the equity. So insurance is actually not being used well by the public. The public is using it literally as a stopgap measure. There's a fear factor involved, such that no one actually buys insurance. It's sold to you, sold very hard to you. You have to have a big distribution network to sell fear to you. This is the reason why the wrong people are the largest customer base of insurance companies, and that's very profitable business.
It's a profitable business, but, isn't it ripe for disruption then?
I think aspects of it are ripe for disruption. How you calculate risk, for instance, you can do it algorithmically now. AI can help you with that. But at the end of the day, there is no getting away from the fact that if you need to sell someone something they don't want to buy, there's no computer that can do that. It's another human being that can convince you that you need this, right? And this is the reason why life insurance companies will always have agents, sales agents, who run around doing the bidding for them.
Vincent, if you look ahead, okay, so maybe there'll be a little bit of disruption, but it would seem still a pretty solid business to invest in over the longer term.
I think in the South African case, definitely, partly for the reasons Hlelo has mentioned, but I also think in the South African case, the business models themselves are quite bloated. So historically, if you look at the cost model of an insurer, yes, they've got really expensive distribution systems, but they also have really expensive and bloated admin systems, especially some of the older ones. And I think where there's going to be major disruption is in those lines. So, is it possible to get, cheaper distribution? I do think so. If you look at Capitec's model, where they've sort of tacked on insurance into the sunk cost of the rest of the branch and the distribution that goes along with, selling loans. There's an example of an insurer that's actually, and when I say an insurer, there's a pretty big insurer inside Capitec. Last I checked, it's pretty much the same profit as Old Mutual now. So I think that's an area that's ripe for disruption, but it sort of speaks to the the one constant that you've highlighted, Stephen, is the need for insurance in South Africa. I think that's always going to be there. I think how it gets distributed over time, that'll be interesting, because at the moment, and like Hlelo mentioned, you've got funeral cover, which is predominant, but it is extremely expensive because there's actually very little underwriting that's done at it. And as, let's call it, consumers hopefully get more sophisticated over time and more financially literate, I think we could see the cost of the insurance drop, and perhaps, people getting better value for money, which will make it a more, probably a better product to sell as well.
Vincent Anthonyrajah and Hlelo Giyose there, breaking down how South African insurers generate profits and examining whether they really are worth putting some money into.
702.
You're listening to The Money Show's best bits.
You've been listening to the Best Bits of the Money Show, a digest of some of the best conversations we've had this week. If you'd like to hear more, please go to our website or your podcast app and search for The Money Show. Thanks for being with us this week. We'll be back on The Money Show 6 o'clock on Monday. Have a good weekend.